Hi, my name is Christy Ferner, and I am in the accounting class at SUU, Accounting 6650, Accounting Ethics Seminar with Dr. Christensen. I will be doing a presentation today on my research paper. It was on ethics in tax accounting. I'll be referring to information that I obtained through 7 different journal articles that I located in the SUU library. I also use my own information, knowledge that I have from practicing in tax, taking classes, as well as just common knowledge and maybe common thoughts of what people think of taxes and our government systems. So as far as the citations and the references in my paper, I've included the references back here as I may refer to some of them, or if you want to see where I'm getting some of the basis of my information, these are the ones that I used. A lot of them were a little crazy in depth and had a whole bunch of crazy calculations, and some of them were helpful, but I was a little surprised with the little information that some of these had, and so hopefully in the future more people will write more of these journals. Okay, so let's get started. Let's go to the introduction. Okay, so first of all, we're talking about ethics in tax accounting. So what is ethics? Ethics is an extremely important principle in the business world. We've been talking about this a lot in class and why it's important. So what is ethics? I guess that's where we need to start. The word ethic refers to moral values that one uses to determine whether something's good or bad. It's the principles or values that they use in determining how to make a decision or how they're going to act. But this applies to businesses too. Ethics in businesses govern how businesses behave and operate. It includes determining which business practices they're going to accept and use. It determines how they're going to make their decisions. It determines how they're going to treat their stakeholders, all people in their business. So it's really important that ethics is really understood. So ethics in accounting govern the finances of the business or individual. Accountants have to use ethical behavior and principles to ensure financial records reflect the financial conditions of a company or individual accurately or appropriately. It comes back to that word trust that we talked about in class a lot. As accountants, we are trusted by the stakeholders to prepare an accurate financial statement, a good reporting of what the company actually is at, the state the company is actually at. There's a lot of people that's relying on that information. And a lot of those people are making big time decisions that impact a lot of things, big time money. So it's stressful, it's a lot. And ethics has become really the focal point because there's been a lot of scandals, including Enron and WorldCom. And so people are really looking at accountants and wondering what their ethics are, and they're determining that we maybe need more standards. We definitely need more ethical accountants. But I will say probably more than accountants, as far as my experience, we really need some good ethical tax accountants, because there's a lot of those that are not practicing ethical decisions. So as far as ethics in tax accounting, this gets really extremely tricky. Tax practitioners must use ethics to determine how to apply the tax code to the finances of businesses to individuals. Taxes in the United States are extremely complex. You have the Internal Revenue the Internal Revenue Code, the tax code. That is extremely ambiguous. It is extremely boring to read and hard to understand. And I'm sure over practice, maybe in time, maybe I'll understand it more. But at this point, it's just extremely complex and difficult. And I think that is very common to all tax practitioners too. And I did talk about that in articles too. It is so complex. And when you get into situations that are uncommon or situations in different industries, there's really no guidance for that. Sometimes there's a publication or something put out that maybe will help with it. There's some guidelines of some sort. But there's a lot of situations and industries that aren't even covered, that you've really got to use ethical judgment to determine what's black and white, what's your middle ground, what are your duties, and how is your decision reflecting ethically in the duties that you have your stakeholders. So we're going to talk about those complexities first. The first one is the ambiguous tax law and regulations. So I just talked about that. It's hard to interpret. You've really got to decipher the code, relate it to the situation or industry, and then make a decision. Take a stance, take a position. You've got to be able to back it up and be comfortable with it. So one of the authors actually gave a really good example, and I like this example because it's been something that I've actually ran into, and a lot of the CPE stuff I've been to have discussed a lot of capital expenditures and repairs. There's a lot of information out there on it. You know what a capital expenditure or capital asset is. You know what a repair is. But it's not always black and white like the Internal Revenue Code states. You apply it to different situations or different industries like rentals, or for the example that was in some of the things I read was a new roof or a chimney. How is that? Is that a repair? I mean, really, you already had a roof, so you're not putting a new roof on. It's not really adding value. You're just really repairing it, but it's a big dollar amount. Maybe it is kind of making the building a better place, and it's financially a better thing for it. But you've really got to look at that and decide what's the best thing. And the problem is capital expenditures, you're depreciating them, so you're deducting a small piece on your tax return each year, whereas the repair, you get to deduct the first year and it's done. You never think about it. You got that big deduction, you're set and you're happy, and that's what we all want. Is bigger deductions, the better. So the tax practitioner has to decide how aggressive or cautious they want to be in their approach of applying the Internal Revenue Codes of capital expenditures versus repairs. So that's just one example of how it gets kind of tricky. So the next complexity is conflicting stakeholders. So there's several stakeholders to a tax accountant. There's the government, your typical taxing authorities, maybe the state of Utah, so any state. You have the federal government. But you also have to consider, this includes like sales tax returns, personal property tax returns. So tax is a lot more than just your income taxes. So there's a lot of stakeholders and things you've got to think about as far as the government. So the next one is you have a duty, or your stakeholder is the client, the taxpayer. You're representing them in their best interest. You have the tax firm. You work for them. You've got to think of how what you're doing is beneficial and ethical to them, what trouble they will get into if you choose not to be unethical. You've got to think of the accounting profession as far as your stakeholders. You represent a large group of professional individuals. Maybe you're licensed as a CPA. You represent those people, and you need to think about how your acts reflect upon them. The last one is you need to think about your own self. What feels right ethically? What decisions are you making? What are your decisions telling you? Are you making them ethical? When a partner comes in and says, no, this is how we're doing it, do you just go with it because he's the partner and he's signing it and he maybe knows better, even though you have that gut feeling that says, look at it again, this isn't right, maybe you need to look at it again. So those are the stakeholders. And the two I really wanted to talk about because I kind of think they're the most complex. They're probably the most important. I didn't read that anymore, so I don't know. But they really have conflicting interests. You're kind of balancing what to do with them. The first one's government. So the government, or the duty that you have to the government, is compliance. Tax compliance is computing tax returns in the way that the Internal Revenue Code and state rulings require you to. You're ensuring that the taxpayer is paying all their taxes due on time and filing the tax returns due on time, and that you understand those periods and due dates. Basically, is making sure, just in layman's terms, it's making sure that taxpayers pay the right amount of tax at the right time and in the right way. Simply said, sounds easy, but it's not. So tax practitioners are to use the perspective of the taxing authority when preparing returns, ensuring that they are prepared in a way that is beneficial to the tax authority. Therefore, tax authorities have the trust, and tax practitioners are being compliant and acting in their best interest. So we're saying that we are acting in the government's best interest. We are putting the government hat on and saying, if I was the government, this is what I would think is most ethical, and this is following the exact rule. So you have that you have that duty. So the next duty is the taxpayer. So as a tax practitioner, you have the duty to the client to minimize the amount of tax due to the taxing authorities by tax planning and tax avoidance. These are both ethical ways to decrease tax liability. So during tax planning, which happens before the end of the year, tax practitioners get with their clients, they research ways to decrease taxable income. They're going to look maybe for additional tax credits they can take. They're going to look at deductions, seeing how they can qualify for them, maybe making some changes so they do qualify for them for the beginning of the year. And even things like making a retirement contribution, for example, to get that income down to result in less taxes. There's a lot of ethical ways to do this. There's a lot of unethical ways to do it. So it's really important that you understand what the ethical ways are. So the client and the taxpayer have the trust in the tax practitioner and are using tax planning in their best interest to minimize the liabilities. So you have two hats you're wearing right here. You have you're putting the hat on and seeing in the government's perspective, and then you're taking it off and putting it in the accounts or in the taxpayer's perspective, and you're trying to minimize tax. And so it's kind of a juggling act, trying to figure out what's the right thing to do. And you've really got to be able to substantiate the decisions that you're making in the taxpayer's behalf if you are discussing it with them. But so when the IRS comes knocking or auditing you, that you can say, hey, these are the reasons. This is how I followed your rules ethically, and that you can substantiate your decisions. They won't always like it, but hopefully you've been ethical enough, you've shown enough due diligence that you can show that you were acting in the interest of both the client as well as the government. So the next complexity in ethics of tax accounting is the social and behavioral influences. So this one I didn't think about right off the bat, and I probably should have, because of course it has an impact. But so we really need to think about what our feelings are, as well as the taxpayer. What are their feelings about the government, their spending, their policies, their decisions? What is it that they're thinking or doing? And how is that going to affect maybe the pressure that the taxpayer puts on us to make decisions, and how that we naturally just think as we're doing prepares? So for example, if an individual or even you yourself as a tax practitioner is upset with policies or maybe spending that the government's doing, you don't agree with it, you're not going to want to contribute your dollars there. You know your tax dollars are going there. This is just more motivation maybe for you to misstate something or lie here or there. But the same goes if an individual is happy or maybe wants to help the government in certain spending or what, they may be like, dude, I'm just playing my part. So you may have clients that, you know what, this is the government's money, I'm doing my share, this is the right thing. They may not even question or push you, or you may not even double think things because you just know it's right. But then you're going to have others, like I just said, that are really against the government and don't want their money going to the government. So they may be pushing harder, giving you more pressure to take a deduction you shouldn't, or decrease income maybe in a way that you shouldn't. So the next example is the same thing as our feelings about the tax code. The tax code isn't necessarily always fair. A lot of people have a lot of hard feelings towards the tax code, good or bad, but they don't think it's fair. They don't agree with it. They think maybe the rates are too high. They're putting too much money in. So they don't want to give the government their money. They really just want to do whatever it takes to make sure that income is as low as possible. Those people you have to worry about, I think, more than the ones above, because they're more inclined to find ways and to really pressure, I think, taxpayers to do things that maybe are against the ethics. and inappropriate. The next thing was social norms. So one of the authors talked about social norms right here, and it says rules and standards that are understood by members of a group and that guide and or constrain the social behaviors without the force of law. So this is basically what society thinks is normal, or what is happening maybe to your neighbor that you think should be happening on your tax return to yourself. So this, for example, if you think about it, so if you have a person or a neighbor and you think that they're taking certain tax credits, or maybe that they're paying less taxes, you may think it's unfair and that it's not fair that you're paying the higher tax, or that you don't get to take that credit. So maybe you just take that credit anyways. Or maybe you misstate your income anyways because taxes are too high and it's unfair and everybody is doing it. And so I think that's our biggest issue, is the thought that it's normal. We all cheat on our taxes. We all take deductions we shouldn't. We all write off meals that we shouldn't. And that's not the case. That may be the case with taxpayers providing incorrect materials to their tax preparers. And this may be also, there are taxpayers who are of course going to do it, but I would like to say that in general taxpayers aren't trying to misstate income or take deductions that they shouldn't. They are, I really think, trying to do the best that they can. So that is the social and behavioral influences. Oh, and I was going to say that everybody thinks that they're just not going to get caught, so might as well do it. There is a small chance that you will get caught. They don't audit everybody, obviously, but that's kind of becoming the social norm, is I'll just do it until I get caught. I probably won't get caught, doesn't matter. So you have to stay away from those thoughts and those perspectives of people, because they're not accurate, and you maybe you won't get caught. Yeah, the chances probably are small that you won't get caught, but you could get caught. But you've got to make an ethical decision, the right decision. And by making those right decisions on these small little pieces of tax returns, maybe deducting personal expenses on your Schedule C, by correcting those and not doing them, you'll be prepared to be more ethical when the bigger decisions come up through tax accounting. Tax evasion. So that's a complexity. There's a lot of tax evasion going on. We read about it in the news. There's a lot of it going on. People are starting to think it's normal. All these tax schemes are normal. They want to be involved in them. They don't want the IRS to have their money. And how tax evasion is different from tax planning. Tax planning is totally ethical. It is, you're following IRS guidelines. However, tax evasion, you are purposely doing things that the IRS does not want you to be doing, and you totally know that it's against the law. And the same goes as people think, well, everybody's doing it, I might as well jump on board. Or I'm never going to get caught, why not? Why shouldn't I do it? I'll just pretend I didn't know. It's becoming a really big deal, and I think the IRS is trying the best they can to start attacking it. Maybe if they ever get more employees, they'll start attacking it more. But it is becoming a very social norm, and we really need to end that thought and that thinking of that. Okay, so we know the complexities. So luckily, we aren't left completely in the dark. The IRS and the AICPA was kind enough to give us some additional resources to go to help us with making ethical standards and or making ethical choices and having some guidelines. And some of them are actually required. So the two main ones I wanted to talk about, and of course there's a lot of them, and there's a lot of seminars. Licensed CPAs have to take CPEs every year. There's a lot of classes that you're going to be taking, and really just constantly be reminding yourself what those ethical issues are and how to behave. But the two main ones I wanted to talk about was the Statement of Standards for Tax Services, and that's developed by the AICPA. This is required for CPAs only, but my suggestion would be for all tax practitioners to strive to follow them. And then you have the Internal Revenue Code, or the IRS's Circular 230, and that's required for all tax practitioners that represent clients in front of the IRS. So basically anybody that is preparing and signing tax returns. So these two have some really good guidance. The AICPA is a little more in-depth or detailed than the IRS's Circular 230, but both have good information in them. So the standard statements of tax services, or SSTS, includes information on signing the tax returns, when tax returns can be signed by tax practitioners, and the rules about signing them. And then as well as concepts related to tax preparation. Things including, in addition to signing the tax returns, of course, tax estimates, error acknowledgements, just anything that relates to the procedures of preparing the return and maybe following up on IRS letters and things and error acknowledgements, whatever, inaccuracies, how to handle those things ethically. The IRS's Circular 230 provide information for people that sign tax returns, of course. But they also provide guidance on how tax practitioners should give advice on tax positions. Tax positions are the tax standing, or trying to think of another word, the position or the decision you have made. So if you have a black and white or a situation that's not black and white, that you're battling what the Internal Revenue Code says, and the situation's not exactly, so you're trying to figure out the middle ground, what's right for the taxpayer, what the Internal Revenue Code would really want you to do in this circumstance. The decision that you make after you evaluate the benefits of the IRS or the taxing authority, taxing agency, whoever, as well as the taxpayer, those are the tax positions. Those are the decisions that you made on the tax return. And so Circular 230 includes information on how to go about that, how to handle it, tax positions. That's not going to tell you how to answer your dilemma and how to make the decision, but it's going to give you some advice on how to ethically evaluate the situation, maybe, or how to handle it in terms of gaining facts, about having due diligence and disclosures, about the supporting documents that you're having, how you're applying things, making sure you're applying it really accurately. It discusses the penalties that are involved, making sure you understand what the facts are compared to the law. All of those things are discussed in the Circular 230. And these are really great resources, but they're not going to cover everything. So it's not going to tell you exactly what to do. Because it's so complex, you need to understand these and apply them, but you need to still be prepared to look at both situations, both duties of the IRS and the government, and try and figure out the best you can, and then substantiate your decisions so that when the IRS comes back, you're prepared to support yourself. Okay, next thing to understand is penalties. And the penalties, I think, as a preparer, you definitely need to understand, but you also need to help the taxpayers understand them. A lot of taxpayers, they hear the April 15th deadline, but they don't get around to it. Maybe the extension's not important to them, or they forgot, oops, oh well. Like, we really need to be hounding our clients saying, hey, it's April 14th, are we extending? Do you take care of it? Or just making sure that they understand that maybe if they didn't pay that tax estimated payment that year, maybe there's going to be some penalties on the return. We need to make sure that we're discussing these things with the client. But not only to protect ourselves from the taxpayer saying, well, my CPA told me I could do this, but also to protect yourself so that you're following the rules right, so that you're not going to have to pay those penalties. And they can be brutal. But they also, I mean, you could lose your license, you could lose your reputation. The penalties are huge. They're much more than just the financial aspect of it. So it's really important that we understand it and make sure we are staying away from that line of being assessed penalties or making decisions that we could be assessed penalties. So penalties can involve the taxpayer, it can involve the tax preparer, it can do both. So there's all sorts of different penalties. So the main reasons for penalties are, of course, generate revenue. Let's be honest, the IRS does want money. But to motivate compliance, the IRS wants us to be compliant. They don't want lying. So these penalties are to keep us being compliant, keep us paying our taxes on time, keep us being ethical, motivating, and the two motivate compliance and tax accounting ethics is kind of the same thing, but they're trying to motivate people being ethic and doing the right things. But then they have penalties for tax evasion. They want to catch those people that are seriously doing illegal things on purpose, that are scamming other taxpayers, maybe using their social security numbers or making erroneous calls to them, making threats to them. They really want to find those people and penalize them, and it is against the law. So tax evasion is important to understand and stay away from. Okay, so types of penalties, there's a whole bunch of them, and it's important that you really study up and are aware of them. You can go to the IRS website, they have a whole list of them. But the basics are, there's penalties for filing something inaccurate. Maybe you have a retirement contribution that you typed in $500, where in fact it was $700. Or there's going to be inaccuracies. That doesn't mean that you purposely did it, but or maybe your client didn't give you a 1099, so you didn't include it in the tax return. However, the IRS received the 1099, so they matched it and say, you should have it. But those things are going to happen, and there's going to be penalties. Maybe you can get the IRS to waive them. Maybe you just have to pay them. That's just part of it. Penalties for not filing a return on time. Understanding of income and tax liabilities. That kind of goes with inaccuracies. Tax evasion. And there's a lot of prepared tax penalties. That is why it is so important to exercise due care and good faith and have the existence of reasonable cause for all the actions you take. You don't want those prepared penalties. They are brutal and they will look poorly upon you. So it's really important that we understand the penalties so that we can stay away from them and make sure that we are following the law. But it's also important that we are telling our clients, because if they knew they were penalized, maybe they'd get their butt in gear and give us the information we need, and we can finish things up. So those are a handful of the complexities there and the penalties and the standards, all the things I went through. That's just a handful. The IRS's website is full of more. A lot of information as far as Internal Revenue Code. So just to conclude, ethics in accounting is very complex. In order for tax preparers or practitioners to maintain trust with the tax accounting professional stakeholders, they must look beyond behavioral influences. They may look beyond the social norms. Don't be pressured by some of those thinking that we naturally have. Don't let our clients pressure us because of what they perceive as social norms or their behavioral influences. And then we have the AICPA and the Circular 230 that we've been given so that we have some ethical standards that we need to follow, and we have some guidelines and guidance on how to handle ourselves and conduct certain situations. And then we have the penalties. The penalties are used to motivate us and to keep people compliant, to motivate taxpayers as well as taxpayers and tax preparers, and to try and avoid tax evasion going on. Those penalties are huge, hopefully to scare people away from doing illegal acts. So after all of this, my biggest recommendation to anybody going into tax, or even people who are in tax and are practicing it regularly and continually and will do so in the future, my recommendation would be just stay up to date on new policies, whether you're practicing or not. So right now I'm actually not practicing because I'm going to school, but I still feel like it's extremely important that I stay up to date on them and understand them. That way I'm not thrown off guard, or when I go back this tax season and I'm start practicing again, I'll remember those things and I'll be up to date and I'll understand what's going on. So just to conclude, the ethical standards will not always provide exact guidance on how to handle all decisions, but it is important that tax preparers practice ethical decision making in all aspects of accounting and in their personal lives. And the more we practice ethical decision makings, the easier it will get and the more natural it will get for us to apply in the small things and in the big things. And that is my presentation. Thank you.